right, so we're talking about how you can find a home you can afford, how you can make an offer that gets accepted, and how you can calculate the cost to buy your home. So these are the things that are of concern to most first-time home buyers. And so once again, my commitment is to help you understand that, how well you can do that for yourself and your family. So if you have any questions during the presentation, feel free to interject, to unmute yourself and ask, because this is interactive, it's a small group. That's the way we like it, so we can really dig in and have all of your questions answered. But today we're going to be focusing on the credit. How can I improve my credit? So the next slide. All right, how can I improve my credit score? Number one way you can improve your credit score during the home buying process. And once again, your score might be 750 or higher, but you always want it to go in an upward direction. During this process, a lot of times we're helping people buy home. And by the time we get closer to the closing, sometimes the credit has to be rerun. And if that's the case, we want the credit score to be up, not down. So number one way you're going to keep your score good is to pay your bills on time. All right, do not close accounts. Do not run up higher balances if you can avoid increasing your credit balances during the home buying process. Please avoid that. But definitely, number one way to avoid that, your score going down, is to pay your bills on time. Number two, we want to get credit. Well, if you need to. Not everybody needs to do this, but one of the techniques that you can do to establish credit and to keep your credit going higher is you can add your utility and cell phone bill onto your credit report. You can do that by calling Experian, TransUnion, or Equifax and working out a situation with them where they will actually take your utility bill. Let's say you're paying Con Edison for electricity, or you might have a cell phone or a regular home phone, and they can give you credit for making your on-time payments. They will actually add that to your credit report. And that is a very unique, but a very powerful tool. Now, good credit does not make up for bad credit. However, every bit counts. So if your score is already 700 and you're happy with it, no need to do that. I wouldn't do that. Don't tamper with it. Just keep paying your bills on time, like we said in the first slide. All right, next thing. You want to pay off your debt balances and keep your balances low. So what that means is if you owe $1,000 and your debt that you have, if you are allowed to borrow $1,000, right? So you might have a Visa card and they allow you to borrow up to $1,000. If you have $500 worth of debt, that means you're at 50% of utilization of your credit. We want you to be below 50% if you can. It doesn't have to be that way, but what we're trying to do right now is just get an understanding of the way we want to keep our credit during the home buying process. So if you can, you want to keep your bills, the utilization of your amount that you can borrow below 50%. If you're above 50%, so for example, if the credit card is, hold on, I'm admitting somebody. If you are below, let's say so once again, you owe $1,000. Once again, Visa card will allow you to borrow $1,000, but you owe 50%. That's 50% utilization. To keep your scores high, you want to stay at a lower than a 50% utilization. So if you owe $250 and they'll allow you to borrow $1,000, you're at 25% utilization. Great place to be. So you want to keep if you can, you want to keep your debts low, and you want to keep maintain your monthly payments on time every month, just the way you've been doing. If you're happy with your credit score 9 times out of 10, if you just keep doing what you've been doing, that should suffice. All right, next thing we want to talk about in terms of how to improve your credit score during the home buying process, and even while you're preparing. Even if you haven't applied yet, you still want to maintain a good credit score, or keep your credit score heading in a higher direction. Number 4, apply for and open new credit accounts only as needed. Ideally, during the home buying process, if you don't have to apply for credit, we prefer that you didn't do that, because what that does is it Well, once again, if you're borrowing money, and the worst thing you can do is borrow, let's say, get a credit card for $1,000 and you go out and spend the whole thousand immediately. That is a negative impact on your credit account. So especially after you apply, you do not want to continue to take on new credit accounts. Okay, I'm going to share my screen with you now. I'm hoping that's working there. Okay, so that's the number 4 ways to improve your credit, right? You want to apply for and open new credit accounts only as needed. So as I'm your loan officer during this process, if you do need to borrow money to buy a car or do anything, please just give me a call first and let me know, and then we'll be able to deal with that as needed. Okay, so next one. Oops, that's 6. Oh, we're going in the wrong direction. Don't close unused credit cards, right? If you have a credit card and it's open, do not close the credit card. You want to keep the credit card open because it is a trade line. So the definition of what I would call perfect credit would be having 5 trade lines. A trade line could be a Visa card, MasterCard, that's a credit card. It could be a car loan, could be a student loan. We prefer you didn't have any student loans, but that's okay. If you do, there's nothing wrong with that. A trade line could also be an installment loan. So you went to the bank and just took out a personal loan. 5 trade lines with balances for over 2 years will give you a very high credit score. That would be my definition of what one could consider perfect credit. And of course, with low balances, you want to not utilize all of your credit that will cause you to have a higher credit score. So if you do have credit cards on your credit report during this process, don't close them because they're beneficial. And the older the history you have with each credit card, the better it is for you and your mortgage application. Just makes you look great. Number 6, don't apply for too much credit, resulting in multiple inquiries. Yes, so sometimes when people are shopping for an automobile or a credit card, they'll inquire, not realizing that each time somebody runs your credit, it leaves an inquiry on your credit report. So you want to avoid, if you can, you want to avoid too many inquiries on your credit report. So when you're coming in to apply, a lot of times the inquiry is already there. It's already done. It's all good. But during the mortgage process, not a great time to go out shopping for a new car or shopping for. So you might say, hey, Mark, I'm not taking new credit. I was just looking to borrow money to buy furniture when we get the house. Well, wait till after you get the house. You can go window shopping, no problem. But there's no need for you to go down to Bob's Furniture store and allow Bob's Furniture to run your credit. Not a good move. Not during the mortgage process because, and the purpose of me saying that is because it will it could impact your credit scores in a way that may not benefit you. So let's move to the next slide. Number 7. Number 7. Yes. Let's talk about disputing inaccuracies on your credit report. Okay, so yes, when you dispute an inaccuracy on your credit report, like there's something on there that's not accurate and you want to get it off of there. There's nothing wrong with that. You should want it off of there. But I want to explain to you how those disputes will impact your credit. If you dispute some erroneous information, the lender is not going to want to use your score as is, because when you dispute something on your credit report, what happens is they remove it from the algorithm and it no longer impacts your score. For you and I, that's great because it pushes your score up because you just removed something negative from your credit report. However, the lender is going to ask you to take it out of dispute. And when you take it out of dispute, it's going to bring your credit score right back to where it was, which is what we'd like to see in the beginning. We want to see what your credit score actually is. So if you're coming into the get pre-approved and you have 3 items on your credit report in dispute, the impact of that will cause your score typically to be higher than what it would be after you remove the disputes. So what we would always do is ask you to remove those disputes. So if you're working with an agency that's trying to help you fix your credit, and I run your credit and I see that that agency is disputing 3 items, I might ask you to get those out of dispute so we can see what the true credit score will be. All right, so what I would know, if you're going to dispute something, the key is to have the dispute resolved. All right, so either A, you're going to not dispute it, or B, if it's already in dispute, take it out of dispute, or C, get it resolved. So if you think that they're going to resolve whatever you're disputing on your credit report, have them resolve it as soon as possible. Because what we don't want to do is have you remove a dispute in the middle of the mortgage process. You're already in contract to buy a house, and now you remove it and the credit score drops, and it could impact your ability to get the mortgage. Okay, number 8. I guess that's it. That's all of the 7 things we're going to talk about today. Okay, so I do want to share with you some case studies of some most recent homes that we've were able to successfully. This one here we sold recently, and just want to give you an idea. This is in Connecticut. All right, this is Danbury, Connecticut. All right, we're not going to talk about the address because this house is gone. So we're not trying to sell the house. What we're trying to do is share with you the types of houses type of things that we're doing, and the types of houses that are selling, and what is available in certain areas. All right, none of these properties are available now, but this will give you an idea of what's possible for you in your mind. Okay, so this particular property, right now in the marketplace, properties are going very quickly. Right here is the back of the house, and I'm hoping you can see this. I'm pretty sure that you can see it. If you can't see it, please unmute yourself. Let me know you can't see it, but I think you should be able to see this slide. All right, so this one got offer accepted in a week. This asking price, this is Danbury, Connecticut. All right, so most of the people we're working with are in New York, but a lot of people are leaving New York, going upstate, out of state, New York, Connecticut, New Jersey, to find better pricing. And so I just wanted to share this with you because this particular house went for $525, right? And so I just want to share with you because in terms of getting a mortgage, if you were to buy a house like this, and this is a case study, this house is not available and these results are not guaranteed. It's the past, and past performance does not guarantee anything in the future, but it's an example, just giving you an example of what things look like. Okay, so the down payment on this house, 3.5% on a $525,000 house was, we went backwards again. All right, was $18,375. So the total cost to buy this house was $28,000. All right, that's with the closing cost, because the closing cost was $9,000. And this house had a property tax in Connecticut was only $8,000 a year. All right, that's Danbury, Connecticut, approximately 8. It might be 8,125, but $8,000. So the person who bought this house, their final monthly payment on this house was $3,000. Right, so this is the mortgage payment. This is not the final payment. The mortgage payment was $3,113. That's the final monthly payment. That would include principal, interest, taxes, and insurance. All right, so afford something like this, this person had $90,000 a year income. Now, it doesn't have to be one individual. A lot of these homes refinancing have 3 individuals. So if you have 3 people who are making $30,000 a year and they want to combine their income to buy a house similar to this is Danbury, Connecticut, then they would need about $90,000 a year. All right, income from the jobs. All right, or if they have a business, they'd have to show 2 years tax returns showing $90,000 income. All right, so this is just to give you an idea of what's possible and what people are doing today. All right, but if you look at this bathroom, that was oh boy, this thing keeps, well, that's the front of the house. Let's flip through the pictures again. That's the kitchen down here, right? That was a big living room. This is a 3,500 square foot house. As you can see, it had 2-car garage. This is the back of the house. And this is the bathroom in the master bedroom, right? The thing is like really big. This is their dining room, same house. And so here's the distance. If you were living in the Bronx, New York, 5 boroughs, or somewhere in the 5 boroughs, I Googled it to just get an idea of how long it takes to drive. It's 58 minutes to Danbury from the Bronx, all right, according to Google. So that's fascinating. Let me see. All right, does anybody have any questions? Let me make sure I can Okay, so let's skip to the next example. This here is case study number 2. This one is in Middletown, New York. All right, this person's credit score is 654, one family house. At this house, we didn't actually sell. We sold one very similar to it, so we just used this one as an example, all right, just so for transparency. But we do a lot of these houses, and the, going to skip to the next. Okay, so this offer that we had on the house, very similar to this one, was accepted in about a week. All right, and when I say the offer was accepted in a week, we're talking about the house came on the market, let's say on a Monday, and by Friday, they have an accepted offer and the house is off the market, right? So these houses in this market we're working are going very, very fast. So as you're shopping for a home and you see something you like, you want to make that offer like firm, you want to make it fast. The last home buyer seminar we did, we talked about making an offer and how to get an offer accepted very quickly. So we have videos on that. So if you want that, just send me an email. I'll send you a video of the last home buyer seminar so you can appreciate that. The asking price on this one was $215,000. All right. This is right here is a typo. It's 525. They didn't get 525. It was $215,000 for this house here. Let me go back. Sorry about that. Okay. This house here was selling for $215,000 in Middletown, New York. So I'm going to show you what you would need in order to qualify to buy this particular house. Okay, so asking price is $215,000. The total cost to buy, the down payment on this house is 3.5%. So $7,525. That's what they put down. And the total cost to buy with the closing costs on this one was $9,000. This is in Middletown. There was $16,525. And this is your property tax. As you notice, the property tax upstate is a lot lower than downstate. So in Yonkers and Mount Vernon, this same house, the property taxes would probably be about $12,000, where here it's only about $5,000 a year, which brings us to the monthly payment on a house like this. The final monthly payment, including the taxes and the insurance, is about $1,615 a month, okay? As you can see, these houses are nice. Some of these have nice kitchens. This is a clean house, right? There's nothing wrong with this house. All right, so the required income for the person who bought this house was about $46,800. So home ownership can be affordable. It's very affordable today, but the drive on this one, here we go. So if you were to drive from the Bronx to Middletown, New York, it's going to take you, these are 3 routes. So here, 1 hour and 22 minutes. It's a little further than Danbury, Connecticut, distance-wise. However, the price is a lot. You got some very good prices up there. Now, obviously, the prices vary and the houses vary, right? So you still have to shop for a house, and there's none of these results are guaranteed to be available at all times. But this is typical, all right? These houses are selling, and we're doing quite a few of them, and people are putting these homes on the market every day. So if you have any questions, this is a great time to pose the question. I'd love to answer them. If not, I think we're about complete.
Mark.
Yes.
Is there any deals like this in like Westchester County or New Jersey as far as the asking price for the homes?
Yes. Okay. Now, every town, and this is what I always recommend to people to do, right? I'm going to send you a copy of my website, right? So you can see where the houses are. They have links to all of these houses. I would recommend you drive to these neighborhoods, get a vibe for how you feel this drive from where you are to, you know, where you work to where these houses are located, that you feel it's a good ride. And then when you get out there, get a vibe for the neighborhood, go to some houses that you see that are currently sold, get a liking for the different streets, the different neighborhoods, and see if you really want to live in that town. And if you do, we'll start sending you houses. But the answer to your question is yes, yes. Well, Westchester County, let's step back for a second, right? Let's go back to this house here. I don't mean to break your heart, but this house here in Westchester County, all right, White Plains, this house would probably be about 1.2. All right.
No.
Yeah, that's White Plains. Yonkers, same house. Because remember, this house is about 3,800 square feet. And the kitchen, you know, these type of kitchens, this is your, yeah, 1.2 easily in White Plains. And this is why people are traveling as far as, you know, Danbury. It's an hour away, right? And that's why I'm talking about these types of, you know, these opportunities, because while they are an hour away, you really get some, the living is nice, you know?
Yeah.
Now this one here, this house is, I think this was about 1600. It looks large, but it's about 1,600 square feet. So it's about half the size of that other house that you saw in Danbury. And you'll find houses just like this in Danbury as well at these prices. In Jersey, we're financing them in Jersey as well at these same price points. And what I also wanted to point out one other thing to you. If you'll notice, this is Danbury, right? The closing costs were $9,000 on this house, right? When you come to this New York house, the closing cost is still about $9,000, even though the house is twice as much. And that's because the closing costs in Connecticut are like a lot lower than in New York. All right, just to point that out. So it's the cost to get into homes in Connecticut is a lot less than it is in New York. But yeah, I'm going to be doing case studies on other homes that will be in different parts of Orange County. We have Stamford, Connecticut, which is half the distance. It's about 30 minutes from the Bronx. I'm just using the Bronx as a gauge because, you know, that just gives you an idea. You know, White Plains from the Bronx is about 20 minutes north of the Bronx. So if you're living in White Plains, you'd probably be about a half hour from Middletown. 45 minutes from Middletown, if you're working in White Plains. Any other questions?
Yeah, so real quick. So
Yeah.
if you and another person are buying a house,
Yes.
which credit score do they look at? Which one do they take? The lowest?
Yes. Okay, so when it comes to the credit scores, they're looking for the lowest middle score. That's a great question. Yes. So if you have two people, now remember there's 3 bureaus, so one bureau could be 700. So one person has 3 scores: TransUnion, Equifax, and Experian. So each agency is going to give you a score. So you may have a 700 score, a 690 score, and a 680 score. We're going to go with the middle score, which in this case would be 690. So if you have two
Right.
people that have 3 scores, we're going to go with the lowest middle score. So everybody's got to work on getting their scores up. And just so you know, we've had plenty of people who come through and their scores are low. We give them some coaching and show them what they need to do. They do everything they're supposed to do, and their scores are much higher by the time we get to closing, or by the time we even submit the loan to buy the house. So we're very helpful in educating people on how to increase your scores.
Now, how does it work?
You broke up. What did you say?
You know, do you have to wait? I said, what about the pre-approval? So you have to make sure you have your credit to a certain point, right?
That's why we do the pre-approval. That is a wonderful tool because we find out your credit score right now. We take a snapshot of it, and then you go out looking for a house. And the reason I'm doing this seminar right now is to educate people, because it's very annoying for us to give you a pre-approval, you go out shopping for this house, and 3 months later you come back with a house and your score dropped because you bought a new car or you did whatever, you know, some of the things we ask you not to do here. And so we want your score to go high.
So we got to work on our credit before we get the pre-approval.
Yes.
You got to make sure that low score is high before you even get the pre-approval.
That is correct. Yes, we want your score to be higher. And even if it's high now, we want you to continue to do the things that is going to maintain a high score. Absolutely, yes.
Okay. Thank you.
All right. Anybody else? Winifred, Evelyn? Okay, so I hope this was very helpful. And what I'm going to do, and I encourage you to monitor your score. So when we get off the line, I'm going to email you a link to an agency that helps you monitor your score. And the reason we choose this agency is because they use an algorithm, different like Credit Karma and some of these other guys, even Experian, TransUnion, they will give you a credit score monitoring device that will tell you what your score is, or you'll get it from your bank. But for some reason, it's always a different score than what we use as a mortgage company. And we found that the FICO score is the one that is usually mirrors what we do. And it's because of the algorithm. Now, sometimes companies will even tell you this is your FICO score, but for some reason, it's always come out different. And I mean, some people will come in here bragging that their score is 700. We run their credit and it's 620, you know. So the score is important. We do scores as low as 550, but trust me, sometimes even though the score, we can still do it as 550, there's reasons why we can't do it that have nothing to do with the score, right? And it's usually the reason why you have the score at 550. So each individual is different, and different people will qualify in different ways. So, but I recommend, you know, we try to provide as much education as possible about how to, you know, get the approval, because we want to help more and more people. So once again, oh, and the next thing is we are having more advanced courses in real estate. So if you have any ideas of what you want to learn about, whatever it is, flipping houses, buying tax liens, whatever it is, we're providing that. And I'd love to hear some ideas of what's important to you, what you would want to learn more about in regards of real estate, or even owning a business, because those two things are tied. All right, income producing properties. So if you have any questions, anything, always feel free to call me, text me, email me. I'm here. All right. And refer your friends, family, co-workers, church members, because we love to help more people. And this is how we do it. All right. So thank you again. And we'll catch you next Thursday. We'll be doing another one. All right. Okay. Good day. Wait, let me.
I'm waiting 20 minutes just for Lyft to connect me to the driver.
How do I shut this down? End meeting.